gold on a full investing cycle basis, when we started to buy it back in Q4 of 2018, not 2019, 2018, obviously had a big breakout at the end of 2019. With follow through here on a relative basis, it's been a great place to have your capital. Coming out of quad 4 to quad 3 is very bullish for most things risk, and as you dig deeper into stagflation or quad 3 and then revisit quad 4, it becomes a bad thing. So I think the bond market understands that. I think the jobs market's going to continue to understand that. Don't forget that the last jobs report is one of the worst that we've seen in rate of change terms. I took out energy, obviously, because you don't need that anymore unless you're shorting it, and I added consumer staples. So again, so that you have your daily risk range. So just like gold, you can allocate your assets dispassionately at the low end of the range in those things. Again, if I was wrong on the economic outlook, I don't think I'd be making money in any of those things. Don't forget that the S&P is pretty close to the top end of the range, within 0.4% of that. NASDAQ just hit an all-time high as well yesterday. It's obviously at the top end of its risk range. And again, if you have any down move, it can feed on itself towards 19 and 20 on the VIX. For those of you that don't remember, can go to that. Only go back to a week ago, okay? So I know it's hard. It's so hard to remember what happened even a week ago. It's so hard for people that don't do macro on a time series basis, that are just basically tourists flipping around, to know what it did a month ago, 3 years ago, 10 years ago within the lens of the cycle.